You're sitting there, staring at charts, trying to figure out where price is going next, and you've already lost. Not because you're wrong about direction, because you're playing a game that's rigged against you from the start. Prediction feels like the entire point of trading. If you can just figure out whether price is going up or down, you'll make money, right? That's the logic. That's what every trading book implies. That's what every YouTube guru sells. And that logic is exactly what's keeping you broke. Here's what nobody tells you. The best traders in the world, the ones actually making consistent money, aren't better at predicting than you. They're not sitting there with some crystal ball seeing the future you can't see. They've just stopped trying to predict entirely. They've figured out something that sounds impossible until you actually understand it. You don't need to know where price is going to make money. You just need to know what you'll do when it gets there. That distinction seems small, but it's everything. It's the difference between profitable trading and gambling with extra steps. Let me show you what prediction actually does to your brain. You look at a chart, and you start building a story. Based on this support level, and that trend line, and the way volume is behaving, price should go up. Notice what just happened. You didn't observe what price is doing. You created a narrative about what price will do. Your brain just took incomplete information and filled in the blanks with a prediction. And here's where it gets dangerous. The moment you make that prediction, your brain becomes emotionally invested in being right. This isn't a personality flaw. This is how human cognition works. When you predict something, your brain treats being right as a reward and being wrong as a threat. So now you're not trading anymore. You're defending your prediction. Price starts moving against your call. A trader who isn't predicting sees this as new information and adjusts. But you've got your identity wrapped up in this prediction. You've told yourself price should go up. Maybe you even told someone else. Your brain doesn't want to admit error. So instead of reacting to what price is actually doing, you start looking for reasons why your prediction is still right. It's just a pullback. It's stop hunting. It's manipulation. This is temporary. Price will come back. You're not analyzing the market anymore. You're rationalizing. You're cherry-picking data that supports your prediction and ignoring everything that contradicts it. This is called confirmation bias, and prediction doesn't just enable it. Prediction requires it. Every single cognitive bias that destroys trading accounts flows directly from trying to predict what comes next. You predicted up, so you ignore bearish signals. You predicted down, so you hold through your stop loss, convinced price will eventually prove you right. You predicted a big move, so you size up way too large. You predicted a small move, so you skip a setup that runs without you. Your entire decision-making process becomes about defending your forecast instead of responding to reality. And here's the insane part. You don't even realize it's happening. You think you're being objective. You think you're reading the market. But what you're actually doing is projecting your internal narrative onto price action and then trading that fantasy instead of what's in front of you. The market doesn't care about your prediction. It's going to do what it does regardless. But because you predicted something, you've now created emotional baggage around every tick. Every move that confirms your prediction feels validating. Every move that contradicts it feels personal. You've turned price movement into an evaluation of your intelligence. And nobody trades well when their ego is on the line. Now let's talk about what prediction does to your execution. You predict price will bounce off support, so you enter long right at that level. But you didn't plan for what happens if support breaks. Why would you? You predicted a bounce. The scenario where support fails isn't part of your mental model because your brain was focused on predicting, not planning. Support breaks. Price drops hard. And you freeze. You didn't prepare for this outcome emotionally or logically. You have no plan, no rules, no predetermined response. So, you do nothing. You just watch your position bleed because your brain is stuck trying to reconcile what's happening with what you predicted would happen. This is the execution paralysis prediction creates. When you predict, you prepare for one future. But the market offers infinite possibilities. The moment reality deviates from your prediction, you're lost. No roadmap. No plan B. Just confusion and reactive decision-making. Compare that to a trader who doesn't predict. They enter long at support, but they've already decided exactly where they're wrong. If price breaks below this level by this amount, I exit. No emotion, no negotiation, just execution. They didn't predict a bounce. They identified a scenario. If price does this, I'll do that. If it does this other thing, I'll do that instead. They've planned for multiple outcomes instead of betting everything on one forecast. So, when price moves, they're not surprised. They're not emotional. They're not paralyzed. They just execute the plan that matches what's actually happening. That's the difference. Prediction creates rigidity. Planning creates adaptability, and adaptability is what keeps you alive in markets that change by the second. Here's another thing prediction does. It makes you trade your opinions instead of your rules. Let's say you have a rule. Only take breakouts above resistance with volume confirmation. Simple enough. But then you look at a chart and you predict a big move is coming. Price is sitting just below resistance. Volume isn't there yet, but you just know this thing is about to explode. So you take the trade early. You didn't follow your rule. Why? Because your prediction overrode your system. You prioritized what you thought would happen over what your tested process requires. And here's the thing. Maybe you're right. Maybe price does explode higher and you make money. But that win just taught your brain something incredibly dangerous. It taught you that your predictions are more valuable than your rules. So next time you predict something, your brain will be even more eager to override your system. And eventually you'll predict wrong. Price won't explode. It'll collapse. And you'll lose big because you entered a trade that didn't meet your criteria. You weren't trading your edge. You were trading your hunch. The traders who survive long-term don't have better hunches. They've just removed hunches from the equation entirely. They don't care what they think will happen. They only care whether their system says to take the trade or not. If the rules say yes, they enter. If the rules say no, they don't. There's no prediction, no opinion, no gut feeling, just process. And process is the only thing that compounds over time. Let's talk about the stress prediction creates, because this is huge. When you predict where price is going, you've created a binary outcome. Right or wrong. Win or lose. Your prediction either happens or it doesn't. Every moment you're in that trade, you're waiting to find out if you were smart or stupid. That's exhausting. Your nervous system treats uncertainty as threat. And prediction guarantees maximum uncertainty because you've staked your emotional well-being on an outcome you can't control. You're watching every tick. Every move against you feels like incoming failure. Every move in your favor feels like temporary relief, but also anxiety that it might reverse. You're on an emotional roller coaster because you're waiting for the market to validate or invalidate your intelligence. Now imagine trading without prediction. You enter a trade because your system said to. You don't know if it'll win or lose. You don't care. You've already accepted both outcomes as equally valid. Your stop loss is placed. Your target is set. You're not waiting to be proven right or wrong. You're just waiting to see which pre-planned outcome occurs. There's no emotional weight to it. Win or lose, you executed your process. That's all that matters. You're calm. You're detached. You're trading like a robot because you're not trying to predict anything. You're just responding to setups. That calmness is what allows you to trade consistently. The stress prediction creates is what makes consistency impossible. Here's where it really clicks. Prediction is about the future. Trading is about the present. When you're predicting, you're mentally living in a future that doesn't exist yet. You're imagining outcomes, building scenarios, hoping for validation. But while you're doing all that, you're missing what's happening right now. The actual price action, the actual market structure, the actual trade signals. You're so busy forecasting that you're not observing. And trading is observation. It's seeing what is, not imagining what might be. The moment you stop trying to predict and start simply responding to what price does, everything changes. You see opportunities you were blind to before because you weren't locked into one narrative. You exit trades faster when they're not working because you're not attached to a prediction. You let winners run because you're not capping them with your limited imagination of what's possible. You become flexible, responsive, present. And that's when you actually start making money. Not because you got better at seeing the future, because you stopped pretending you could. The bottom line is this. Prediction feels productive. It feels like trading. It feels like you're doing something smart. But prediction is actually the thing sabotaging everything else. It creates emotional attachment to outcomes. It triggers confirmation bias. It causes execution paralysis when price doesn't do what you expected. It makes you override your rules. It generates stress and anxiety. It keeps you mentally trapped in a future you can't control instead of present you can respond to. And worst of all, it convinces you that the reason you're losing is because you're not good enough at predicting yet. So you keep trying. You add more indicators. You study more patterns. You search for that one secret that'll finally let you see the future. And you never realize the entire pursuit is the problem. The best traders don't predict better. They've just stopped predicting entirely. They've built systems that tell them what to do in every scenario. They've accepted that they don't know what comes next, and they've made peace with that. They trade probabilities, not certainties. They plan responses, not outcomes. They stay present instead of projecting into the future. And that's why they win. Not because they're smarter. Because they stop playing a game they can't win. Stop trying to predict where price is going. Start planning what you'll do when it gets there. That shift right there is worth more than every indicator and pattern you'll ever learn.